things are better in emerging markets. It's amazing, but I think what Powell does here or what central bankers do around the world really has a big effect on emerging markets because the last thing we need are rates going up and currencies going down. And we started to see a little bit of that, I think, as we headed into fall and winter last year. But it weathered that storm and is now a good place to be, I think.
I think so. I mean, I think when you think about what's happening in 2019, you have to put it in context of 2018. And the three big issues in 2018, the issue of the dollar, the issue of a slowing China, and the third being the trade protectionism war. And I think 2019, those things look incrementally better, and you've got better value for emerging markets. So yes, we think it's better. However, it's still not out of the woods yet. It's still not clear, specifically with regard to the third issue, protectionism, that necessarily a good deal will be struck.
And just slowing growth.
And globally, overall, you have global growth slowing.
But as far as valuations go, it's still cheaper than developed markets.
Yeah, absolutely. But I suppose when you're looking at valuations on a global basis, actually one of the big issues is the US versus everything else. So effectively, the US looks relatively expensive versus just about any other market you compared to.
You know, one thing, when you look at emerging markets, they're fragile. In other words, if there isn't a China trade deal, if there isn't a Brexit deal, if these protectionism things continue, they seem to hurt more than everybody else in terms of this kind of a condition. So don't you have to consider it somewhat fragile?
Well, I think one of the key things to remember with emerging markets is that actually more often than not, it's the foreigners who are the drivers of the markets. So foreign sentiment and what's happening globally has a big impact on that. There are one or two markets where that's different, such as the domestic market in China, where the domestic investors are the key drivers. And perhaps that's one of the areas where you should be looking at. I think certainly the Asia market offers some pretty good value after last year's collapse. And if China is serious about reflation and specifically focus on domestic, then actually the A shares look very interesting.
You have people on the ground in Thailand, Indonesia, India, and others monitoring elections that are important to your investments in those areas. I mean, it would seem to me that you need some professional advice if you're out watching CNBC this morning. I mean, if you're worried about election, I have no idea who's running in Thailand or Indonesia and you would need some expertise, I think. What negative surprises could happen in Thailand or Indonesia at this point?
Well, in Thailand, I think it's a transition from the military rule to actual democratic rule.
Okay.
And I think the issue there is more that happens peacefully and efficiently.
Okay.
I think the bigger issue, perhaps, in terms of immediate elections coming up, is obviously the big one in India, where whether or not Prime Minister Modi is able to win a majority again. And there are some concerns that there will be a reduced majority and maybe even less than that.
And what's your expectation on that specific issue?
Our expectation is that, first of all, the big reforms have been done, so whoever comes to power is going to have a better time with it. But the second thing is that he will come back with a reduced majority, but will not lose the election.
So Brazil is a positive. So surprises in elections can be a positive as well as a negative.
Absolutely. So if you take Brazil as a good example of that, Bolsonaro has got a fairly radical, by Brazilian standards, economic reform being proposed, and if he delivers on just half of those things, that market would look a lot better, and indeed the opportunities for growth in terms of earnings and indeed economic growth would be much better as well.
Some of his thoughts have not been greatly welcomed as of yet, as you know.
Well, I think one of the issues with perhaps Bolsonaro is you may have to make a division between his economic policies and his social policies. I would say that socially, there's some of the things would be open for some debate. But with regard to the economic policies, those are, I think, very solid.
So I guess the bottom line is they're cheaper, but they're more fragile. So the United States is more expensive, but you can make, I think, more educated decision. I don't think you're going to get blindsided quite as much, perhaps, here, right? I mean, is it worth paying the premium valuation?
Well, I would say two things. First of all, when you're looking at markets more generally, there's the general decline of liquidity overall, and as a consequence of that, volatility is rising, and that affects all financial assets, including US stock markets. The second thing is the rise of populism. And actually, with regard to populism, that ultimately boils down to the issue of state intervention. State intervention is rising. whether that's the form of protectionism, whether that's the form of redistribution, whether that's the form of increased taxes. And in that regard, I don't think emerging markets are necessarily worse off than developed markets.